Hello and welcome to the March 2019 quarterly update for the Diversified Infrastructure and Property Portfolio. I'm Evan Lucas, our Chief Strategist and also Portfolio Manager. This is the best quarter in this portfolio that we've actually had since inception. A massive increase, 11.95%. And not only that, I really also want to highlight the fact that the yield on it now is 5.27%. And that in itself is a telling statistic and a telling story for what actually happened during the quarter. I need to really highlight particularly the Australian infrastructure products. They are clearly bond proxies. They have a very, very stable income, have reasonable yield. The other thing about it that is clearly also going to be a future question is the fact that majority of them have little or no franking credits on top of them. Something that's likely to drive this space further forward is the probable election movement towards the Australian Labor Party and their changes to franking credits. This may actually be also an attraction going forward, but let's actually highlight the five that are inside there: Transurban, Sydney Airports, Horizon, AGL, and also APA Group. Transurban, 13.29%. If you have a look at Sydney Airports, 10.44%. Now, APA Group was actually the best performer. It was up 17.4%, but admittedly it had some structural issues from Q4. But overall, those plays continue to see real strong strength. There's a bit of risk came into markets, and we saw that. We also see the idea that there is probably going to be another cut in interest rates here in Australia sometime in the future, probably within the next year and a half. And that's also happening globally. So it wasn't just an infrastructure Australian-centric story, it was an infrastructure story globally. And if you have a look there on the listed provider as well, it was a major contributor to the portfolio overall. It attributed around about 3.8%. So very, very strong on the infrastructure side. But this wasn't just infrastructure, it happened in property as well. And that is because also most properties have the same functional setup in terms of franking. They have little or no franking credits. And again, if they're a bond proxy, which clearly they are, they drove it. In fact, the Australian REITs themselves were the best performing sector in March, up 5.1%, and really did drive through that space. And the VAP, so the Vanguard Australian Property, was another major contributor to this portfolio. And as I said, we expect that to continue forward. If we do see changes to monetary policy globally and also domestically, bond proxies are going to do well, as bond markets have already got to incredibly low yield levels and investors out there are chasing it. Changes in government, as we also pointed to, may actually also see some really decent attractions into this space, as the franking credit issue will therefore be ignored by this overall portfolio. So very good quarter, and actually expect it to continue on in 2019.